We saw some selling in Meta in pre-market trading. The company posted an earnings beat, but it also said it will raise spending to stay competitive in the AI race. Alphabet and Microsoft also reported their latest quarter. Let's take a look at broad themes emerging from these big tech earnings. We're joined by Christine Tan, portfolio manager at SLGI Asset Management. Christine, great to see you.
Good morning, Andy.
Maybe we can put up Meta in the pre-market. This has come up before, of course, the massive spending on AI. They won't be earning it back immediately.
Yeah, I think the key themes that we're getting out of so far, about half of the Mag 7 have reported, we're going to get a few more today, is that spending. Not only are they spending a lot, but when they're looking at sort of guiding to what they're planning for 2026, they're actually going to be spending even more in 2026. So Meta is in the market issuing some bonds, some of them actually going as far out as 40 years. And to your point, Andy, it's going to be less clear, especially, in terms of when we see that ROI and the timing. But again, for now, it very much is, if you are a believer in AI, the focus now is really in building out that infrastructure, building out that inferencing power, and perhaps less about near-term profitability. Of course, our portfolio managers are being very cautious. They're sort of watching for that ROI, but there are some who just believe that this should be about building out that infra and really trying to capture as much inferencing powers as possible. And you're also starting to run into some limits as well. So power availability is something that's come up a lot more in terms of how are you going to power those data centers that you're going to be building.
But the earnings beats are still coming, broadly speaking.
Broadly speaking, yes. I think, the markets have kind of gotten used to and to some extent spoiled by what they would expect from large cap AI. So the focus really is more on the guidance. What are they saying for the next quarter, perhaps for the next year, and kind of balancing, again, that CapEx plan and what they're going to spend on building out some of the capacity and what they think that could look like for their top line revenue and perhaps earnings going forward.
Broadly speaking, what are you and your colleagues doing? Are you overweight US tech right now or underweight?
So our underlying US managers they do like some of the names. They're not broadly owning all of the AI companies. Some of them, they do struggle a little bit with the valuation. Some of them have a clearer cash flow and more sort of growth visibility in terms of when you're going to get those returns on that investment. Our underlying portfolio managers are very much focused on sort of quality growth and less about just which companies are spending the most on that infra. So certainly wouldn't categorize it as overweight overall AI, but there are a couple of names that they do like and they are overweight.
Are you able to mention a couple of names that they're overweight right now, Christine? You can't get into individual stocks? No. Oh, okay, no problem.
Yes.
What was your feeling about the Bank of Canada rate cut yesterday? It looks as though Tiff Macklem, the governor, is not inclining towards another reduction in the near term.
It was very much fully priced in. I think both the Bank of Canada and the Fed rate cuts yesterday were basically in the market. If anything, if there was no rate cut, there would have been quite a bit of volatility in the bond market. I think, we're much further along in the rate cut cycle in Canada. And I think Governor Tiff Macklem was right to sort of be a bit more cautious in terms of managing expectations for the path ahead, right? We're starting at a lower point now than, let's say, what the Federal Reserve is. So, and I think he's been calling out for a few meetings now that there are limits to what monetary policy can do. When you're looking at the main headwind for the Canadian economy, it's what's happening on the trade and tariff front. So lowering the cost of capital is not necessarily going to change or offset that impact. So I think he's rightly calling out that there needs to be different types of policy, predominantly on the fiscal side, some of these big nation building projects and these new trade deals that Prime Minister Carney sort of on the other side of the world negotiating. And those are really what we need to offset the main headwind of the main economic headwind. So I think he's right in sort of calling out that there are real limits to monetary policy, and we are pretty far along in the rate cut cycle.
Just finally, the U.S. consumer, of course, is a big factor. There's so many of them. It's such a high-income country that it's a factor in the world economy. You reckon the U.S. consumer is showing signs of slowing down?
You know what, Andy, that's a great call out. So we're bringing back that phrase again, the K-shaped economy, right? Like we heard a lot of the K-shape and when it was during the pandemic, and then coming out of the pandemic, and now it's really referencing that consumer. So if you're looking at the higher income, the wealthiest consumers, really, it's not just a U.S. phenomenon. Even in Canada, those consumers are doing fine. Generally, their financial wealth has gone up. Equity markets are either at or still near all-time highs. But if you look at the middle income to lower income families, these are the families that are struggling still with affordability, because even though inflation has sort of moderated, absolute price levels are much higher than where they were 2 to 3 years ago, and income growth hasn't kept up. And if you're looking at where there is some concerns around perhaps the employment outlook, i.e. sectors where they're in Canada where it might be more impacted by trade and tariff concerns, again, it's also hitting these households more. So what you're hearing from some of the consumer-facing companies is really reflecting that. It's that generally, the middle and lower income families are much more price sensitive. They're trading down. They're more value conscious. They're delaying any kind of discretionary purchases. Any spending that's housing related, again, partly because the housing market is still quite soft, is also quite soft. Whereas if you're a higher end consumer, then perhaps that demand has been much more resilient. So nothing really surprising there. And something that we follow very closely is the Bank of Canada's quarterly consumer expectations survey, where they sort of survey a sample of Canadians to get a sense of how they feel. And for several quarters now, consumers in Canada have been talking about that. We're worried about debt servicing. We are being very careful about how we spend and looking for deals. So everything's kind of lining up towards that K-shaped consumer.
Oh, okay, which is the wealthier consumers doing well, but the lower income group struggling. Christine,
correct.
Thank you very much indeed for joining us.
Thank you, Andy.
That is Christine Tan joining us there.